welcome to Business at 9. I'm Shabani Gharat. Joining us from Chennai is my colleague Jude Sanit. Now, in a few hours, U.S. Treasury Secretary Scott Bessent is expected to make some key announcement. This is being touted as the toughest sanctions in the history against Iran. Now, with this war, the war will in fact enter its 7th month, will take a new turn. Now, U.S. President Donald Trump called it Iran's economic D-Day. So there is a lot that we are expecting, coming in a few hours, in fact, Jude, and Iran is going to face the heat. It seems like that.
Absolutely. Even as this war enters its 7th month, the rial has in fact fallen to a whole new low, even as the naval blockade is well and truly in force. Now, these sanctions are expected to cripple Iran further. Tehran, for instance, has vowed to hit back, and amidst the back and forth, investors too are keeping a close watch on the developments and oil prices. In fact, my colleague Sumita gets us a roundup on what to expect.
That's right. Brent crude levels have corrected slightly, but they still remain elevated above the $90 per barrel mark. In fact, this even as the U.S. is set to announce toughest sanctions in the history of such a kind of conflict against Iran at 2 p.m. EDT, and its Treasury Secretary Scott Bessent is going to make that announcement. He's earlier said that the goal is to collapse the Iranian government, and tougher sanctions will reduce the need for a fresh, large-scale military operation against the country. And in fact, the U.S. pressure is extending well beyond Iran, because remember, President Donald Trump also tweeted that Washington is warning countries and entities that are providing Iran with an economic lifeline. In fact, countries that provide Iran with any kind of financial support or economic support, they could also face consequences. So this press conference will be important from that point of view as well. Now, Iran's foreign ministry has condemned these sanctions. It is pushing back against these new economic sanctions that could be unveiled, and it has called these proposed measures illegal and inhumane. And not just that, it has vowed to shut oil exports from the Gulf if, quote-unquote, this economic war continues. And this announcement was made by Mohsen Rezai, the Secretary of Iran's Supreme National Security Council, on pushing back against these new U.S. economic sanctions. In fact, Masoud Pezeshkian, the president of Iran, has called for a diplomatic solution. And in fact, the U.S. was seeking some support from the Chinese side, but China has also registered its firm opposition to these economic D-Day sanctions. And in fact, it has said that additional sanctions will fail to resolve any ongoing dispute. Remember, this is coming in even as there is no clear diplomatic breakthrough. Of course, both the sides have said that they want to arrive at a diplomatic solution. However, the earlier peace deal, which was signed or agreed upon by both the sides in the month of June, that has fallen flat. And after that, there has been no meaningful engagement between the two sides.
Right, Sumita, thank you so much for that. Now, the U.S. markets are showing mixed signals, with broader markets falling by more than 0.3% as declines in chip stocks weigh on the sentiment. The S&P 500 and NASDAQ are in the red, while Dow Jones is the only major index trading slightly higher. Meanwhile, the ongoing complications in the West Asia conflict are also keeping pressures on oil prices. We have Sunidhi with more details on this.
That's right. The rising tensions in West Asia and a fresh round of economic pressure from Washington are setting a cautious tone across global markets today. The U.S. is preparing its strictest sanctions yet, aiming to sever Iran entirely from global trade and penalizing any third-party nations assisting Tehran. Meanwhile, however, Iran has rejected all threats, and it's asserting that it has alternative trade channels. While energy analysts warn of tighter Iranian supply and heightened geopolitical risks, stable transit through the vital Strait of Hormuz is actually keeping the immediate supply fears in a check. Moving on to crude oil prices, talking about them, crude oil prices have softened today as energy markets actually await details on the enforcement of the new measures. Both WTI and Brent crude traded lower during the sessions, with analysts maintaining a wide forecast range for Brent through the second half of the year. Meanwhile, the safe haven demand for gold has pushed it upwards toward a multi-month high, and it is supported by softening dollar and an easing bond yields. On the Wall Street end, major indices saw mixed trading following a turbulent week, Persian Gulf friction and corporate debt overhang continued to weigh on sentiment, with semiconductor stocks, like you said, leading broader weakness across tech, while blue chips showed modest resilience. In the bond markets, however, U.S. Treasury yields retreated across both benchmark 10-year and long-term maturities, aided by expectations that the Treasury could use its cash balances to increase debt buyback. Going forward, investors will now have to look forward to upcoming inflation readings, GDP data, and the Federal Reserve's Jackson Hole commentary later this week. Over to you.
Well, thanks, Sundhi, for that update. Moving on, Tata Consultancy Services has said it will acquire 100% stake in MHP, which, remember, is a subsidiary of Porsche AG, for an enterprise value of approximately 3,574 crore rupees. The acquisition is part of a broader 5-year strategic partnership valued at about 1.25 billion euros between TCS and the German sports car maker. My colleague Sujit brings us this update on that acquisition.
TCS has entered into a strategic arrangement with European car maker Porsche for acquiring its unit consulting arm, basically for 320 million euros. The entire deal involves acquisition of the consulting arm, which is MHP Management, and along with that, there is also a strategic deal that comes in with these for TCS, wherein Porsche would be will become a client for TCS and will have a potential revenue of 1.25 billion euros over the next 5 years. The entire deal will require TCS to also onboard 4,500 employees of Porsche and create a center of excellence in Germany. It will also allow TCS to get access to over 300 customers, which includes Porsche. Porsche accounts for nearly 40% of revenue, 30 to 40% of revenues of MHP, and then other clients, which includes the Volkswagen Group, and there are other clients from a defense and aerospace industries, which account for other revenue. The deal also, as I said, is acquired for 320 million euros and has an enterprise value that's roughly around 5 times EV by EBITDA, because this MHP has a EBITDA of nearly 10% and what TCS is acquiring is the entire operations of MHP in Germany and some other countries where MHP has its base. It's also accretive in nature from an EPS point of view in the first full year of operation. The deal is expected to be completed by end of the calendar year, and the revenues will be consolidated with TCS in the fourth quarter of FY27. The first full year of FY28 will be EPS accretive for TCS, and TCS is hoping that because MHP is currently on site, it will move some part of it to offshore and help in improving the margins as a whole. So there would be an initial impact of margins on TCS there for initial period before the entire integration happens, which will take at least 12 to 15 months, and then it hopes to get back to the same level of margins, which is about 25% going forward. So the deal, as I said, is going to add roughly around $1.25 billion euros to TCS over the next 5 years, and it will make sure that the European operations, which currently is around 10 to 15% of the revenues, gets a boost, because it's another 10% additional revenues coming in from the automobile point of view for TCS.
Right, now moving on, speaking to ET now, Kuldeep, ISMA President Neeraj Shirgaonkar in fact says hoarding sugar prices may have risen sharply, but industry says the issue is not a shortage of stocks. Speculation and advanced stocking by bulk buyers have driven the recent price surge. Let's listen in.
I wouldn't say that it's skyrocketing. The prices have increased. Like I mentioned, there is enough stock of sugar in the country to take us into the new season. Government has taken a lot of steps to ensure that these are all protectionist steps. There is no panic at all. Like we explained in our press conference, there is enough sugar. There's a closing stock of 35 lakh tons. In spite of that, certain areas in the country, sugar is being hoarded. There's artificial shortness which has been created, due to which we are seeing a certain spurt in sugar prices. However, due to certain measures taken, like stock holding limits are there for traders, for bulk consumers, physical verification of stock is happening in sugar factories as we speak. There's a early season starting in the south in Karnataka, Tamil Nadu and other areas where sugar will come in. Other areas of the country, large major sugarcane producers are in fact planning to start earlier to make sure that everything goes perfectly. So from all these measures, I do see a correction in the prices, and I don't see any problem in the sugar stocks right now.
Moving on, UPI has completed 10 years of its digital payments revolution, and in this decade it has reached 11 countries and gained a global share of 49% out of all real-time transactions. In fact, the Finance Ministry has said that the next decade of UPI is going to drive much greater transformation. Prakash is here with more details.
Well, UPI completes 10 years tomorrow, marking a decade of India's digital payment innovation. The Finance Ministry has come out with a statement saying that the next decade will be more innovative and transformative, and that will make UPI self-sustainable. In fact, the government has also mentioned that it remains committed to enabling the next phase of UPI-led innovation, and that and this comes against the backdrop of amendments to the Payment and Settlement System Act, which will pave the way for MDR charges on transaction above rupees 2,000, a very significant development. However, the government has reiterated that UPI transaction will be free of cost for small consumers, and of course MDR charges will be imposed on high-value transactions or businesses. Therefore, the government is trying to ensure that the UPI remain free for small consumers. The Finance Ministry, in its statement, has reiterated that the UPI is currently operational in 11 countries. As of 2025, financial year 2025, UPI accounts for nearly 49% of the world's real-time payment transaction volume. In addition to that, person-to-merchant transactions account for 63% of total transactions volume. In addition to that, P2M transactions were largely driven by small ticket payments, with 86% below 500. That clearly indicates that the new amendments to the Act is not going to hamper UPI transformation and its growth. Number of banks live on UPI increased from 44 banks in financial year 2016-17 to 703 banks by financial year 2026. So these are key statistics, but the government has reiterated that the transformation and innovation will continue, and the next decade will be more growth-oriented as far as UPI transaction is concerned.
Well, on that note, it is time for us to slip into a very short break. You don't go anywhere. We'll be right back on Business at 9.
Welcome back. You're watching Business at 9 with me, Jude Sanath, and my colleague Shubhani Garg, who's joining in from our Mumbai studios. Moving on to some geopolitical action next. External Affairs Minister S. Jaishankar, who is currently on a two-day tour of Russia, met President Vladimir Putin. During the meeting, Jaishankar added that the economic cooperation between both countries, India and Russia, has in fact grown quite significantly. The minister also said that Putin and Prime Minister Modi could meet along the sidelines of the SCO summit in Bishkek. Remember, Putin is also expected to visit New Delhi for the BRICS Leaders Summit on the 12th and 13th of September. My colleague Srinjoy brings us more details on that all-important visit.
External Affairs Minister S. Jaishankar has called on Vladimir Putin, the Russian president. And quite important it is to remember that in a short while, at the SCO summit, you will have Prime Minister Modi and President Putin at the same place at the same time. And then after that, you will have President Putin coming to India for the BRICS summit. Now, Russia and India still have a lot of work together to do, because at this point, there is, of course, the issue of energy, because of the problems in the Gulf, India had been importing a lot of Russian oil, but there have been problems as a result. The Americans are not very happy. There's something in the American Congress which has to be kept in mind. There are also issues that relate to Ukrainian attacks on Russian refineries. That apart, India imports a lot of Russian fertilizer. India and Russia also work together in areas like defense. Even today, India is buying some new Russian equipment like the S-400. That apart, there is issue about all kinds of spares for the weapon that India has, Russian still. Apart from that, you have atomic energy. Once again, there is Kudan Kulam. India has Russian-made nuclear reactors. So civil nuclear energy is very big as well. So there is space as well. So as a result, whenever India and Russia have a meeting, as there was this time, there is quite a lot to talk about.
And let me first of all begin by conveying the good wishes of Prime Minister Narendra Modi.
Thank you.
Excellency, he has given me a personal communication, which I would like to hand over to you. We have this morning had a meeting of the Intergovernmental Commission. I think overall we have a good report to give to you. I think our economic cooperation, trade, energy, fertilizers, nuclear, other dimensions as well. I'd be pleased to speak about it in detail, but overall I think our economic cooperation has grown very significantly. Prime Minister Modi looks forward to meeting you at the SCO summit, then welcoming you in India for the BRICS summit, and in due course, as per your mutual convenience, having the annual summit. So we have, Excellency, I think, a very strong picture of cooperation to present. And I again thank you very much for the honor of receiving me today.
Right. Now, moving on, U.S. Ambassador Sergio Gore's comments at the ET World Leader Forum have triggered a controversy. While recalling details of Modi-Trump meeting on the sidelines of the G7 in Evian in France, he said that the Ministry of External Affairs had convened to the U.S. side that it would prefer no media interaction by the leaders after the meeting. The U.S. envoy suggested that Trump had forgotten the request and ended up taking many questions as the media interaction lasted for more than 45 minutes after the meeting with Modi. Now, following the controversy, government sources said that the discussion on the public appearances of the leaders are standard protocol.
U.S. Ambassador to India, Sergio Gore, and also people in the government of India talking about that important meeting between Prime Minister Narendra Modi and U.S. President Donald Trump, and importantly, what happened after that. Because according to Gore, the Indian side had said these would be press statements. President Trump would say what he would, and Prime Minister Modi would say what he would. There would be no media, and there would be no questions. That's the important point. There would be no questions. But what we now learn is that President Trump probably forgot that there was to be no questions. And he asked for questions, and he answered them. And that went on for 45 minutes. Now, President Trump was asked many questions. Many of those questions were from the Indian media. And it must be said he enjoyed himself answering those questions, or that's what it looked like when he was doing that.
Well, with that, it's a wrap on Business at 9 from Shibani, myself, and everyone right here at the ET Now studios. Thanks for watching, and we'll see you tomorrow. But keep staying tuned to ET Now for more news and market updates. For the moment, it's goodbye and good night.
Arvind.